Welcome to Soulful Academics, where I teach you guys how to budget, save, and invest. Go to Soulful Academics so you can start your free budget today. You can escape debt. First thing you do whenever opening up a stock chart is you need to analyze the dates at the bottom. So the bottom right here, you see the months and the year. So depending on what time frame you are, you got the 1 day time frame, which shows you candlesticks moving every minute. So it opens up, it closes every minute, and then we have stock candlesticks that show every 5 minutes, that opens and closes every 5 minutes. And we have the 1 month that shows candlesticks open and closing every 30 minutes. And then the 3 months candlesticks that show that open up every 1 hour and close every hour. And then the 6 month candlesticks that open and close every 2 hours. And then the year to date, which is stocks that show every year, and then the 1 day candlestick, and then also the 1 year, which will do the same thing, and the 5 years, which shows candlesticks every week. Now we got the dates at the bottom. We know that the dates are at the bottom of the chart. We know that the right is what the price is, because we got to see where price is going. That is, stock market is just based off price and movements of where the prices is. So right, we see the numbers right here, and then boom, at the bottom we see dates. Every date has a certain amount of number or price that it was every day based off the time frame you're looking at. So now let's look at the 1 minute time frame or the 1 day time frame. We see that candlesticks are opening down and they start to really fluctuate way faster. So based off the 1 minute, we see that candlesticks are always moving up and down whenever we're in the 1 minute, compared to something like the 1 year time frame. The candlestick is moving barely compared to what the 1 minute's looking like. So we don't see as much fluctuation up and down, just because this candlestick right here in the 1 year time frame, it's about 23 hours left. 23 hours left in this candlestick for it to close, meaning that we're going to go on to the next one. So every 23 hours we're going to see a candlestick form. So either it's down or it's up. We're going to see a candlestick post on this chart. Whether what kind of investor or trader you are, you want to decide on what type of time frame you use. Me personally, a person that invests long term, I like to see how candlesticks in the markets are moving every day. If I'm looking at Bitcoin long term, I would want to use the 1 year time frame or the 5 year time frame, which shows the candlesticks form every week. Based off what Bitcoin is doing, if I'm looking at Bitcoin, this week candlestick is showing a hammer. What a hammer is basically is showing that the candlestick opened at the bottom, it went up to the top, and it closed at the top, meaning it ended the week off high, meaning it opened higher where it opened previously. So now we're seeing huge momentum inside this candlestick right here. And this is a sign of buyers. When buyers step into the market, we see hammer candlesticks, dragonfly, doji, or we see wick candlesticks that open towards the bottom and they end up towards the high side. Same thing that happened in February 24th. Price Bitcoin went down to 78,000, and now we're seeing that the candlestick ended up closing for Bitcoin to 96,000. This right here is showing that it was a huge buyer strength for that week, but necessarily is not telling us that Bitcoin will gonna push up to the next week following, because as we see the next week, Bitcoin opened up at 94,000. It ended up pushing all the way back down to 80,000 that following week. So you want to use candlesticks that formulate cordially together, not just only studying one candlestick at a time. Just because only looking at one candlestick at a time can give you false data or false analysis, compared to you having more data points and more candlesticks that form on your chart, and you can put those together to make a better analysis and where a price is headed towards. So always look at multiple candlesticks and where the movement and where their placements are at, compared to only just analyzing one candlestick and making a reaction off one candlestick. Now you guys know the difference between the 1 minute time frame or the 1 day time frame. So now let's look at ways that candlesticks can form, and what kind of ways you can use your strategy that move on these candlesticks. So now boom, let's look at the 1 day time frame again. If I was a day trader, I would wait for prices catch huge swings or dips like how Bitcoin did earlier today. It went down to 80,000, and then once I start seeing every minute that prices in an uptrend, basically is an uptrend is whenever prices have higher highs and higher lows. So whenever we see an uptrend, that's the easiest way that we can profit off a stock is whenever we see a trend of buyers. A trend of buyers first have to come off a huge market dip or crash. If I'm looking at the 1 day time frame, I'm gonna be patient for something to come really down really low and to keep watching it. And once I see a trend and it doesn't break support levels, basically a support level is the floor of buyers. So let's draw our area of support in this Bitcoin right here in this 1 minute time frame. Boom, that would be area of support. Is basically what has one line, horizontal line that has the most touches. So if I have one floor right here, price will bounce off of it right here. Let's see another line that has the most touches again. Right here will be another great line. And don't let these lines confuse you. This is just support areas where price will bounce off of to go higher. And now let's make another line of resistance where price fell back down after we got 1 touch, 2 touch, 3 touch, 4 touches right here. We got 5 touches right here. And then we see 1 touch, 2 touch, 3 touch, 4 touch, 5 touch right here. And way more touches over here. So that's a sign that it's going to be a support level. Anytime we see our data points or prices hitting that price multiple times, we want to make it an area of support that could be possibly broken and be another area of support. So let's continue buying into these areas of support. And we dollar cost average into these areas of support until we see a huge green candlestick that's either a red candlestick break our support levels or a huge great big green candlestick push up towards the upside. And that would be a good day trading strategy. Always using stop loss, I'm using a good position size too. And this support and resistance is just ways that you can first start off to learn how price movements affect where buyers and sellers are in supply and demand areas. But if you're new starting off and you don't like to see these lines, you don't need them. So we can go ahead and clear them. That's just a way you can analyze key areas of buyers and support and sellers. So support is where buyers step in and they push the price up. So if it hits, a basketball hits the floor, it's going to bounce up. Think about that as your support level. Resistance is basically how gravity works. If you throw something in the air, it has to fall down. So boom, resistance is gonna basically pull something down. So price is trying to pull down whenever we see resistance. So any price level where price hit the top and it went down is where you want to draw your resistance levels. And it has to have multiple touches. So we see one right here and resistance right here because price fell right here too. We see another touch right here. We see another touch right here. But if you want a bigger picture, you make sure you zoom out to the 5-day time frame. Boom, Bitcoin looks like it's a bottoming out. Keyword to always hear in stock market, we see correction. Correction is whenever the stock market falls down and it's in a dip from its all-time high or previous highs and it's lower than where it was all time. Basically, what we're looking at right now is a correction. Rally is whenever stocks push up the price to the moon and they push up with higher highs and higher lows. An uptrend is basically in the rally, same thing. And a downtrend is whenever stocks have lower highs and lower lows, so meaning price fell down over time. And bottoming out is whenever a stock is in a range after a huge sell-off. Stock starts to hit a range, meaning consolidate. Consolidation is whenever there's no highs, there's no lows, but price is just ranging, moving in a constant line. Basically, it's not really a constant line. It's a mean of the same average prices for a few days, and then boom, we start to see that the price starts to spike up out of our support levels. Our resistance levels. Price starts to break out of our resistance level. Now, boom, after that it breaks our resistance level, we see it hit a new area of support. And now, after we hit a new area of support, it keeps breaking up higher after it hits our support level, meaning an uptrend is starting. So, bottoming out is what you want to look for after a huge sell-off, because it's a sign that stocks are reversing. The bears are people that want to push the price down are stepping away from the market, and now a new people of bulls are entered the market to buy at that price. So the stock market is basically full of bulls and bears, people fighting for areas of prices in the stock market that are either in demand or either greed or fear. Basically, supply or demand. So people have a huge lot of supply at a price level people want to buy. That will be a lot of demand where price will be, and the people want to buy that. And there's not price is not at a certain demand, then stock will continue selling off. But right now we're seeing that Bitcoin is a huge demand around this $80,000 to $77,000 range, based off a stock bottoming out. Now let's practice drawing some key areas of support and resistance in a 1 hour time frame or a 1 year time frame. Let's look at the bottom where Bitcoin hit right here around 76,000. That would be an area of support. If price breaks below that level, that would be a great area of buyers stepping in again. Now boom, let's look at another one right here. We can see that price touched around this level of 84,000 and it went back down, so that shows signs of resistance. That could be a new area of support later. Now boom, another one will be over here around $92,000 range. We see that price touched it around at least 4 times. That could be another area of resistance, this new support level over there too. So now we can keep drawing our support and resistance where we see the stocks have the most touches if we put a horizontal line right through them. So we see another one right here, and then we see one around the $108,000 level. We see a whole bunch of resistance. Prices are falling down in that area. It seems like Bitcoin couldn't get past that level. So boom, first thing, we got our first area of support is 76,000. So this could be our stop loss. If Bitcoin fell below 76,000, we don't have around so-called academics, we don't really necessarily use a stop loss because we're not traders like that. We're long-term investors. But if you're a trader, then you can use this with a grain of salt. You can use your stop loss around 76,000, but long-term investors, you will just buy more if Bitcoin fell below 76,000. But right now we're seeing Bitcoin is trying to break past resistance. So right now it's a test. If Bitcoin goes back down to our support level, which is 76,000, we can either buy more, or as a trader we can sell it and get out the position so we don't hurt our account and lose money, right? Or we can hold and buy more, right? Okay, so if Bitcoin actually in the next few days, because this candlestick grows every day, right? We've seen this last 2 days. This was yesterday, this was the day before. If the candlestick that's happening right now that will close in 23 hours breaks above this resistance level, which is 84,000, that's a huge sign that resistance is getting broken. So in a healthy trend, whenever resistance is getting broken and prices going through the roof, that's a huge sign of people buying and pushing the price up. So that's a good healthy uptrend that you want to be buying in. If we can have a confirmation level of if Bitcoin pushes about around 87,000, then we can confirm that Bitcoin is reversed in this trend and we want to be buying based off these 3 candlesticks. First was this one right here. People always get confused on red candlesticks, meaning that the price is always going to go down, but all candlesticks are important signs of ways that you can analyze a stock because they're telling you a message. First of all, this one right here that happened on Monday 10th in March 25 was showing that price went up to 84,000, but it couldn't stay there. The bulls couldn't push the price up that high. The bears took over and ended up pushing the price down. So boom, we see a sign of bears being in control, and this is right here a reversal candlestick once we see it in the middle of a downtrend. So we've seen that this right here means that indecision, but the bears took over. But the next candlestick after that, this candlestick pattern right here is a bullish engulfing. So the stock pushed down all the way to 76,000 and went down even lower from the previous candlestick the next day and quickly pushed back up to 83,000. So these candlesticks, these 2 candlesticks alone are showing us signs of a trend reversal. Just because if we see a candlestick on the left that's showing indecision or reversal, which is like a doji. When we look up doji candlestick is basically what we see in trend reversals. A doji is a candlestick chart pattern that indicates indecision in the market. So we'll see how dojis look like. There's plenty of dojis in the markets, but the one we seen right here was the gravestone doji or the bearish doji. We got bullish and bearish dojis. So in a bearish doji, you want to look an eye on in a sell-off. In a bullish doji is you want to look off in the uptrend. So either of these can happen whenever there's a reversal or something new is going to happen in the market or someone new is going to take over the market. So you can see these in the uptrend about to reverse to go to a downtrend. You can see one in the downtrend about to reverse to go to an uptrend. You just got to pay attention to the next candlestick, what it's going to do. So always pay attention whenever you see a doji candlestick. You want to see what the next move is going to look like. And you want to document, you want to be patient enough to wait the next day or the next week on what the candlestick is going to look like based on what time frame you are in. So if we're in the 1 year time frame, we're going to wait for the next day because candlesticks move every day. If you're in a 5 week time frame and you're seeing dojis like this or indecision or some key type of candlestick like that, you got to be patient enough to wait for the next one to see what it's going to say so you can get confirmation on what your analysis and what your data is, because you're not only going to go off one piece of data. So we see that a gravestone doji is price opens low and it goes high and ends up closing near the bottom. This is a great, beautiful candlestick to see in the markets. And another one is the long-legged dojis, meaning price went up to the low and it went up to the high, ended up closing right in the middle. This is one of the best ones that you can see in the market trends or uptrend too, is whenever you see indecision, because there's no telling who won the fight. Every candlestick is showing you a fight between the bulls and bears and who won. So either the bears won a fight or either the bulls or either none of them. And then the long-legged doji means that no one won a fight. It was a tug-of-war that ended up people just staying in the middle and dragging each other wherever they want to go. So the next one is the dragonfly doji. Price went to the lowest, ended up going to the high, and ended up closing at the high. So this is a great bullish candlestick to see in the uptrend whenever you see prices are trying to go towards the upside. You want to look out for the next candlestick. It can either be a trend reversal or it can be a bullish move to the upside. And so now we see, let's look at dojis and chart patterns. We see a long-legged doji right here. Boom. The next candlestick is showing us a bullish candlestick, but you gotta wait for the next one too for confirmation. So we waited for the next one, another bullish candlestick. Boom. Now we see stock went up to the moon right here. So it could have been an easy trade based off these three candlesticks. You always want to look at these three candlesticks towards the bottom side and then get confirmation for the next two. Now boom, we see another morning doji start, which is similar to what Bitcoin is doing. We see that there was three big red candlesticks right here. Now boom, we see a morning doji, meaning the price opened at the bottom, went up to the high, closed at the bottom, and the next one is we see a huge bullish candlestick, and the next one we see an evening doji star. So this means basically indecision. So whatever stuff in the candlestick that happens after this could be either a big one up or the one towards downside. In this circumstance, it was going toward downside, but not way lower. It went lower than the morning star. So this is ones that we can see that we just gotta keep watching. Either the price can break this level or it can go up to the upside or stay in this range. You just gotta keep watching now based off what these candlesticks are telling us. Based off that huge doji is similar to what this market is doing in Bitcoin. We can continue watching Bitcoin and continue looking at the market cap. You can trade off the stock, off the market cap as well. I'll show you guys that in the next video. But right now, we're trading out and investing out candlesticks. And these are great ways to strategize and get really precise ways to invest in than someone that just buys periodically in huge market swings. And this way you can get a huge return on your investment by analyzing these candlesticks. And now let's look at the all-time. Whenever I look at the all-time, I don't look at any RSIs or any type of indicators, no special lines on my screen. You don't need all that, guys. You just need a simple line that tells you the amount of percentage the stock fell or how much it fell. Even that you don't even need. bare minimum you probably can use support and resistance, but all the extra garbage is not necessary. So let's look at the all time. So the all means basically what the stock looked like ever since it released on the markets. So we see that the chart data, we got Bitcoin's chart data from September 2017. And now Bitcoin was open around at least $2,917, right? And we're seeing that the more we go to the left on the stocks is the dates way before, okay? The more we go to the right is whenever we see stock prices more recently. So if you want to stay up to date, you always want to stay on the right side of the chart. If you want to go do back testing, looking at past dates and prices, you always got to go to the left. But you always want to do both, okay? Past data doesn't guarantee future results. I want to let you guys know that, because probability is always key based off economic data. There's no guarantee on ways that it's going to guarantee happen based off past economic data, okay? You might use that data, what happened in the past, to get a better analysis on what's going on right now, but it's not guaranteed to happen. It's something that happened off past historic backtesting doesn't always guarantee future results. So that's your only strategy. You want to add more risk into your strategy and consider risk first, because that's the way I used to think. Okay, Bitcoin always performed well in March and May, so I'm gonna buy and I'm gonna put all my money in this month so I can get tons of money and pay off all my debt. That's a hypothetical way to think of me, because I'm using off what past data is trying to tell me, and the markets know that people think like that, so they might not even do that. They might just do the whole opposite. March can be the worst month in 2025 in the last 10 years, so you just got to pay attention to what economically is going on at the time, and you want to just look at what's going on now and pay attention to the candlesticks now. So you can always look at the past ones overall, where the formation of all these candlesticks are going towards, though. It's going towards upside, and that's facts. So we see Bitcoin is getting higher highs and higher lows. We've seen every time Bitcoin fell down at least 50%. Let's get our info line. Bitcoin fell down in 2021, 79%. And all time, every month that Bitcoin fell down consistently of 12 months, is known to rebound the next following year. So we've seen that provably historical of Bitcoin. And now we see that continue right now. Bitcoin is in a dip, and we've seen that this month right now is currently in indecision. So how I know that is basically this doji candlestick I showed you guys whenever I was showing you out right here, is that doji means indecision. So doji is basically a wick, which means the body of the price where it opened and closed, and we see that the body is where it's going to end up closing at. You want to pay attention where the body is relative to the wick. So now we're really getting deeper into candlestick analysis. So when we look at the wick, is basically where price fluctuated during the time of that period. Base the body is going to tell us where price is going to end up closing and how much of that volume of the stock right now is going to end up closing, if it was huge volatility or not. Right now we see that stock, cryptocurrency, Bitcoin is just right now in the indecision. So based off what the next month is doing right now, or how we end the month in 19 more days, if Bitcoin stays in this range right now, we just know that basically Bitcoin was in a range this month and it fell down lower previously. That's because we see the last month it was at 78,658 in February, and this month it fell down even lower. If I was a monthly investor, I would wait until we form this formation of Bitcoin in the 19 days. I'll wait the 19 days to see how this candlestick ends up closing, because the opening and close is important. That's not how it's opening, because it might be falsely, it might be a false breakout. So the company or the stock, cryptocurrency, might look like it's going to be a bullish engulfing, meaning the price candlestick look like this right here, a bullish engulfing right here going up. But if it haven't closed like that yet, it can quickly go to look like this one right here going down. Okay, so we always want to make sure we wait for the candlestick to close, because that's confirmation that candlestick is not moving anymore. It's on to the next one. We're on to the next day or the next month or whatever candlestick time frame we're looking at. So we want to continue waiting these 19 days to see how this moves. If Bitcoin is in the decision and it's a doji, I want to pay attention to the next month. Either a huge move first towards the downside, okay? Whether we hit 66,000 or 68,000 or anywhere around the support level, because we're seeing that this is a huge area of support. Past resistance turns into new support. What does that mean, Kelvin? Prices in this time during August 2024, okay? We've seen that 56,000 was definitely an area of support just because we've seen every time it hit that level, price bounced back up, okay? 56,000. Let's extend that line for now so I can give y'all guys a visual of what I'm talking about. We're seeing that price hit this level once, twice, 3 times, 4 times, 5 times, 6 times, 8 times, meaning 9 times consistently starting from March 2024 all the way to October 24. These are 9 data points for us to get to use that to help prove that our data is working towards us. Okay? So boom, price hit 56,000. That's showing that 56,000 for Bitcoin is a key area of support and demand. So we got to get our resistance. So let's look at where price fell down the most times whenever price touched it. Boom, that would be right here. If you guessed it, you were right. 72,000. So Bitcoin fell down around 72,000. That was a huge area of resistance. It touched it 1, 2, 3, 4, 5, 6 times before it finally broke out in November. It broke out at 70,000. So this is great candlestick analysis right here. Past resistance can turn into new support, and I can show you that, guys. If we can get this candlestick to close for the month, if we see a huge drop in Bitcoin, if it passes below 63,000, it can touch our support level right here. Just because it touched this level right here this many times, it could bounce off there because it's a key area of support, meaning buyers are in this area. So people are waiting for price to touch this area to pick it back up. And even this area around where Bitcoin is at now, showing us where buyers are at. People like to buy at that price based off November's big, huge bullish engulfing. So this is what we can analyze right here. This move right here, we can start analyzing these candlesticks starting from March. So March, it stayed in the range, okay, for 1, 2, 3, 4, 5 months. This is what these candlesticks are telling us. For these 5 months, markets, cryptocurrency and Bitcoin stayed in the range, and then August came, which broke out of that range, because we see it was around this 58,000 to 70,000 range, and then we seen it finally break below the 48,000. So price has to first, in order to rally, it has to break down below our support level, and then break back up to our support level, which is now resistance turning into support and then going up higher. So as we see that this hammer candlestick, it basically means price is going up towards the moon. Let me show y'all guys what a hammer candlestick is real quick. It's basically what I showed you, but people like to see the information themselves. Hammer candlestick right here is a huge sign of buyers. Hammer is a bullish reversal candlestick that appears at the end of a downtrend. So you want to wait for this hammer candlestick at the downtrend. So after we see price stays in the consolidation, now boom, that bullish hammer candlestick comes in August. From there, people push the price down to 48,000, the lowest we've seen that year. Now buyers start coming in the next month. September, boom, it hit down to 52,000, but it's not below 48,000. Keep an eye on that. Now boom, the next following month in October, they push it up to 68,000, and now November comes, prices hits 100,000, but it first had to break that support level in order to take off, to break past resistance. Okay, guys, always remember that price has to break our support level in order to break towards the roof, meaning the basketball has to dribble on the floor first before it can go up higher. Things have to drop first in order to rally. So Next month, we can see either if Bitcoin wants to break down this support level about around 78,000 and touch our previous support level around 60,000, or past resistance level around 70,000 that started in November and was all the way till March 2024. Then we can see after doing that breaking down there, then we can start expecting some prices to really going back past our all-time high, which is our resistance level for us is around $110,000. You just want to look at it as Candlestick's trying to tell us a story, and they're trying to tell us a story to how the book is going to tell us about towards the end. And meaning there's not going to be no end whenever it comes to the candlestick. Only time ends is whenever the candlestick closes, okay? First off, when the book opens, the stock starts to move and then it starts fluctuating. It's trying to say that it's trying to go either up or down, but the chapter isn't over until the candlestick closes, guys. So always pay attention to what time frame you're looking at, because some different time frames can tell us different ways of the stock is trying to tell us a message and a story. Different time frames give us a better look at what short terms are doing or what long terms are going on. So all time is the best way to look at the stock direction where it's headed towards all time. Short term movements, the 1 minute is a good way to look at it, where it's looking at like super zoomed in, like what's going on currently right now in prices. If we can see uptrends right there, that could be a good sign that stock can either be bottoming out or cryptocurrency can be bottoming out in that correction. We're gonna have to figure that out with the 1 day time frame, the 5 day time frame too as well, which is showing us a great picture of a stock bottoming out. I mean, these are perfect fundamentals. We can draw our support resistance for the 5 day time frame. We got at least 4 touches right here. We can get 5 touches right here, probably 6. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touches. So we seen that the stock right here around 81,000 can be a huge area of support, meaning buyers are stepping in. And we can draw another line around right here. We can get at least 4 touches. Okay, and then we can draw another one from right here, which basically is like the bottom of the trend where it hit all-time low, and then we see the price goes below that. We can keep an eye on the price, but right now price is staying way above where our recent support is. So we continue drawing our resistance levels whenever price is gonna drop. So right there, boom, we see 1, 2, 3, 4, 5, 6, 7 touches right there, which is our resistance. So if we can see price break out around this area of support, whenever we see these candlesticks that grows every 5 minutes in the 5 day time frame, we can keep an eye on price, because we've seen that price hit our support level. Like I said, price has to break our support level in order to rally. So if we can see that price broke our support level, we can see that price is ready to break this resistance level. If not, it can test it and then come back and break our support level again lower, and then eventually come back to try to test it. But this is how support and resistance work as a beginner investor looking at candlesticks and analyzing how candlestick and technical analysis influence the stock price. And in 1 month is a great way to look at a stock that moves every 30 minutes. And this one I like to use too to see the overall picture on like a stock bottoming out. We see this nice little double bottom on Bitcoin. We see the one that hit on February 28th and another one on March 10th. And these are just chart patterns. So we've seen that. I'll teach you guys another chart pattern that happens to look for on a company or stock is whenever a trend reversal is about to happen. So this right here is called a head and shoulders. So we can look at the left shoulder right here and the right shoulder. It's not a perfect head and shoulder, but it's showing that this stock or cryptocurrency is going to fall down based off the next candlesticks. So this one right here, if we look at the head right here and then the shoulder, right shoulder and the left shoulder, we keep looking, we keep waiting for price to really break down, and then boom, we see that price fell down to 76,000. after seeing the head and shoulder around this 91,000 range. So let's look at a head and shoulder pattern. See, a head and shoulder pattern looks just like how Bitcoin did in that move. Looks just like that. It might not be perfect head and shoulder, but it's still giving us a sign that, okay, price is gonna fall. So whether you see the head and shoulder or not, it's gonna happen. And most of the time, head and shoulders are not gonna be perfect. Like the shoulder is not always gonna be perfect, right, lined up with the other shoulder. Most of the time, 8 times out of 10, it might be lower or higher than the other shoulder, but that's still a trend reversal that's going to happen towards the downside. So always be aware of this, whether you're looking at this in a 1 minute or even in the 1 day or even in the 1 month time frame. Always look for these type of head and shoulders to sell off before the market kinds of dip, or be prepared to buy the dip after the head and shoulder pattern, which make the price fall down. And you want to look for these in the uptrend or in a consolidation or range, which was Bitcoin was in right now. And this is going to show that this is trying to finish the formation of a stock with the head and shoulder, and it can eventually lead to it bottoming out after a few months or weeks after the head and shoulder pattern, or in a few days or hours. So it depends on what time frame you're looking at. And another thing I like to mention is on the 1 day time frame or the 1 minute time frame, the more on the left, you're gonna see way more candlesticks on the time frame compared to you're looking at the all-time time frame. You'll see less candlesticks, and you'll see a more overall description of what the stock did for the month. Compared to the 1 minute, you're gonna see like thousands, hundreds of candlesticks all mushed up together because it's moving every minute. So if you get something more every minute, or you get volume every minute, you're gonna have way more than compared to volume every 15 minutes or every hour or every day, compared to the 1 day time frame or 1 year time frame. The 1 year time frame is gonna show us candlesticks every 1 day, and it's gonna have way less candlesticks compared to the 5 minute or the 5 day time frame. So that's a good thing to keep a note on and always look at so you can get more analysis. Are you trying to look at something that has way more volume in a short term, or you're just trying to see less candlesticks and trying to get an overall picture of where the direction of price is going? And these concepts can be applied to any chart. I mean, we can look at Tesla, for example. We can apply the same support and resistance levels. If you know how to do it in one, you can do it in all of them. So that's the master. That's the way you can become a master in the stock market. If you know one, you can use it all. Doesn't mean that you're always going to be accurate. It's just a way that you can read what the stock market is trying to tell you instead of predicting it. That's what new investors always try to have trouble with, is trying to out read the market or outsmart the market, and rather than just reading it and getting a response of what it's trying to tell us. That's what the market is. The market is a book. It's an open book that has ways that it's trying to tell us words and tell us things and tell us signs based off the economy and data and companies' earnings and stuff like that. Okay, so we can apply these support and resistance to Tesla. We've seen in the past. Let's look at the past support resistance for Tesla. We see huge areas of support and resistance inside this $215 range to $280 range. Okay, we want to continue looking at Tesla around this range, just because we've seen it consolidate in this area. So anywhere we see consolidation or a range, price stayed in the area for a long period of time, is called a consolidation, meaning it stayed in the range. It didn't go high, it didn't go lower. It kind of stayed in the area or bubble. We want to see how Tesla had this nice little bottom out in 2023 and 2024. And once it hit that little nice handle on the bottom, it took off August 2024 and it rallied all the way towards the end of the year. But first, it had to stay in this consolidation, meaning it had to build up that support and resistance. So let's take a look at how this happened. So if we're looking right now in the time frame that we're looking at right now, which is the 2-hour time frame, we see that stock in May 2024 hit an all-time low, 145, and then boom, that was going to be our area of support because that was the lowest bottom. And now after that, like I said, price has to break our support level first. So support was really supposed to be right here. So price breaks our support level first and then hits an all-time low or a real low support level, which is like it doesn't make another one before that. And once we see that it breaks, it shoots back up, and now boom, we see that price is hitting our new support level, and then we see it go up, break resistance, it goes back to make a new support level, and boom, it breaks resistance. So this is what a pattern of uptrend looks like. Okay, so an uptrend is basically higher highs and lower lows, right? So the lower lows have to get higher. So this is going to be our support level, and this is going to be another higher lower low, and then look at another higher lower low. Okay, and then a higher another lower low. So basically, we get the burger. We got the bun at the top, which is trying to be the resistance, which is trying to push the sandwich down and the price down. Once price hits the bottom and it falls down, we're gonna have to go back towards the top, and then it's gonna reach a new level of support, which is basically an area where price corrects again, so we can go back up and break a new type of resistance. And this is what a healthy uptrend looks like. Okay, and then after that, it comes down a huge correction after a huge rally like that. After price gapped up so much and rallied so high, it has to be a huge correction again, which it means price has to break new area of support, previous support again. So now we see that Tesla went back down to 182 to climb our way to 271 in 2024. And now after it hit that price, it quickly broke resistance, and then it went back down below resistance so it can get ready to break a new resistance. So boom, that area now turns into support. That's because where price is sitting at, buyers are trying to push it back up to break resistance again, which that did at 263, but it couldn't break that support around 269. So pulled it back down to 213 to that support level again, previous support level. So see guys, this is history that's showing that support and resistance can turn into support and resistance again, or it can be points of area support again. So boom, it quickly brought down to 211 and it pushed it to 272, and now it broke resistance again. Now boom, it touches a new area of support, one of our support levels, 240, and now boom, this is where the move really takes off to break all support resistance levels. It went from 240 in November and it quickly went up to 358, leaving no resistance levels behind to make an all-time high. Now boom, we see a correction in November at 311, which is a new area of support. Now push it back up to 361, and then there's resistance there to push it back down to make new support. So basically, support and resistance is where the price falls down and corrects. The resistance is whenever it reaches that new high. So this area of support right here, resistance, support, resistance, support, resistance. We just draw lines for you guys so you can see that at a better angle, and you can analyze what the price is doing and the lines what it's touching. So support, resistance. Once you've been doing it so long, you don't need to draw the support resistance lines. You just naturally have an eye for them. Now boom, now we're looking at this right here. We're currently looking at December. After that huge rally uptrend of our support and resistance levels, we're seeing that Tesla had to sell off again. Like I said, price likes to break all the previous support levels whenever you have to rally again. So we had to get this Tesla stock back in buy mode, but first it has to break all support levels and crash. So boom, Tesla touched our fourth support level, and it broke down many of our support levels to get here. And it took about, let's see, use the info line so we don't have to calculate it that long. It took about 85 days for Tesla to break our previous support levels, and it's currently down 55%. So we can use tools like this, like the info line, to give us information on what this is doing with our support and resistance in the stock price. And now we continue seeing that Tesla is that area of support again, so we can just rinse and repeat again. We can do what we did previously, buying in support levels previously to push it back to $500. And that's going to cap it off for today's video. Today I showed you guys how to draw basic support and resistance so you can analyze uptrends and stock downtrends. And then I also taught you guys how to analyze time frames, starting from the 1 day time frame all the way to the all-time time frame. And I also showed you guys how to read a stock chart, showing you guys from the bottom of the time and the dates, moving from the left side, which is previous dates, and the right side is going to be the most recent dates. And I showed you guys the right side of the chart is going to be the prices, meaning the bottom of the price is going to be the lowest, and the top of the price chart is going to be the highest price of the chart. And now I also taught you guys about strategies of different candlesticks that you can use, like doji, hammer candlestick to use, and then market turns, uptrends and downtrends to see reversals. And I taught you guys about key concepts like consolidation, range, bottoming out, and uptrends and downtrends, and key terms like that terminology. And I hope you guys take this with a grain of salt to become the best version investor that you can be. Make sure you like, comment, subscribe. Go to SoFo Academic so you can start your budget today and use that free budget calculator I made for you. Caught the latest Bitcoin to the Moon t-shirts. I'll see you guys in the next one. We out.